and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the festive edition special on market today. We are, the festive season is upon us, very close to now Diwali, and of course this is just the right time when we speak to the top market voices that we have to find out what the sentiment on the Lal Street is really looking like and what is the way forward for you and me as a retail investors right there of the Indian equities. Today we have a very special person joining in. Mr. Gautam Shah joins in. He's the founder of Goldilocks Premium Research. Warm welcome to you, sir, and thank you so much for joining in. Festive greetings to you, to your team members, to all your family members and loved ones as well. We hope that this festive season really turns out to be bright and blessed for all of you and the year to follow as well. I want to begin by first understanding from you. Of course, the run-up to the festive season has not been very smooth. It's been volatile the entire October. We've also seen downturns. And at the same time, do you think this probably, in fact, gives an opportunity for investors who could not participate in the erstwhile rally to now get a chance to get into some value in the markets right now? And that is the best way how one celebrates Diwali, probably.
Good morning, Sakshi, and thanks for having me, and season's greetings to you, your entire team, and all your viewers as well. As you rightly said, the last few weeks and the run-up to the festive season hasn't been the best. But I don't think one should complain because we've enjoyed an excellent rally over the last 6 to 8 months. I think we had come to a point where valuations were completely out of whack. All kinds of stocks, all kinds of sectors were doing well, and there was a little bit of concern. The market needed consolidation. And if you look at the last 3 years, there have been phases of about 3 to 6 months wherein the Nifty and the Midcap index have gone through phases of consolidation. I think something similar seems to be happening. And internally, the market has corrected a lot. If you actually look at the Midcap index and the Smallcap index, they've just corrected about 3-4% from the lifetime highs. Whereas internally, if you look at the entire NSE, you will notice that only 30% of the stocks are trading above the 50-day moving average. So it is not showing up on the screen, but if you speak to people on the ground and their portfolios and the kind of stocks, we've already had a very large correction. But coming to the setup itself, I think there is room for some more near-term weakness. So if you think short-term, I think the market has the potential to move down towards the level of 24,000, with 24,750 being a marker number, and we are currently around that number. So if we break that level, another 2-4% downside is possible. But anything close to 24,000, this market once again becomes a very good risk-reward buy. Because charts will be in favor. Fundamentally, we are at a 23-24p, and the result season have gone off well. Smart money continues to be active. Domestic money, is immense even in today's market. If you look at the SIP numbers. So I don't think the bull market is going away. This is just a temporary pause, a correction, which is healthy and which was much needed. Hopefully, this will end in the next few weeks. And thereafter, if you have to plan from this Diwali to next Diwali, I think this market is still a buy and you should be in the right pockets. Last year you had capital goods and real estate delivering supernormal returns, pharma delivering supernormal returns. I think metals and IT are two pockets of the market which could deliver supernormal returns between this Diwali and next Diwali. So I wouldn't be too negative. I would say that the area around 23,500, 24,000 is a sort of a base. And if everything goes as per plan, I do expect the markets to rebound sometime in the next 1 month. And if I have to give you a number for the next 1 year that viewers can look forward to, my working number is 26,800. You might say it's not a out of the box number, it's not something special, but I think we've come to a point where the market is going to see a gradual grind up and not a vertical run up, which we have got used to in the last 1 year.
Okay, wonderful. So you have probably given that context in the wonderful way right ahead. So we do expect some more 2 to 4% downtick, but from there on we could actually look up, and 26,800 would be gradually achieved in the markets. And the metals and IT are the two pockets where you actually expect outperformance to come in when the next rally starts. I now want to come I will be circling back to IT and metals as well to get some of the names right there from you. But how are you looking at the banking space, for instance? Do you think banks, this is the right time for us to go big and go long on private banks especially? Some bounce back is coming in on the likes of HDFC. on Axis as well, on ICICI, the way they are pulling up, does it give you confidence, or is there still going to be some more time before they actually get onto the bandwagon?
Well, if you actually look at the charts, there is no real confidence because the bank Nifty behaved almost like a pendulum. It goes up 3,000 points. One gets the feeling that a new trend has come in play, and then it starts losing 2,000 points once again. So it's been a very stop-start kind of a trend for the bank Nifty for the last 8 months. And because the top stocks have such a high weightage, they have not been able to get into a trend, and therefore the bank Nifty has not been able to do well. So I think you have to be very selective. In terms of valuations and in terms of charts, I'm very clear that the bank Nifty does not have much downside. But at the same time, they have their own headwinds. So the serious upside might also not be there. And you need to be very selective. I would like to stay with the big boys. I want to stay with SDFC Bank on the private banking side. I think the rebound looks good. And I think over the next 1 year, you will see or you should see SDFC Bank trade at levels of 2000 and beyond. So I think my confidence level for SDFC is pretty high. On the other hand, I think one of the star performers in the banking index for the next 1 year could be SBI. I think it's been my favorite right from lower levels from a year and a half now. It's gone through nice consolidation over the last 3 months. I wouldn't be surprised if SBI delivers 30-35% upside from current levels. So I want to stay with the big boys. I don't want to go lower down because I think the setups are not there. So I'm staying away from a Kotak or an IndusInd or an RBL or a Bandhan or an IDFC first. I don't think there are opportunities. Stick to the top two names and I think you'll be sorted.
Okay, so that's as far as the banks are concerned. But in the recent run-up, we've also seen some AMC and broking houses also outperform in the markets. A lot of it also had to do with the expectation around NSE listing coming back, the SIP flows that you already mentioned too. Does this space really look promising? Should one really allocate more funds within their portfolio to this basket, the AMC and broking space?
See, I would like to put it in a much bigger basket of financial services. And within financial services, I think the recent SEBI move and all of that, which gets implemented in November, I think it might just be a little more negative for broking companies and AMCs. So I'm not very comfortable because I think a lot of the prices, a lot of the positives are in the price. And all those positives that could play out over the next 3 years are in the price of today. So I don't think this is a good time to really bet on broking companies. I know they have done well in the recent past, but they look fully priced at this point. However, if you broaden it out and if you look at the financial services space, I think stocks like CDSL, stocks like CAMS, I think they could be much bigger opportunities of the next 1 year. So I'm not very, very keen on AMCs and broking companies, but other themes, even a small stock like Protein, which does some very interesting work, they could be bigger opportunities for the next 1 year.
Okay, wonderful. Let's go lower down and let's ask you about the mid and the small caps, the underperformance that we are seeing at play. Is there going to be more downside to what we have already seen play out, or is a bottom near for mid and small caps? How should one look at these spaces?
See, there is a big disconnect. When you look at the index chart, you feel that there is room for a lot more downside because the indices haven't corrected. But if you look lower down and if you scan 500, top 500, 700 stocks, you'll realize that on an average, there has already been a 20-25% downside. So that's the disconnect that we have noticed. But I do believe that serious money from domestic investors is now going into the mid caps and small caps. So your top 200 stocks in the mid caps and small caps will remain protected. So the key message is to stick to quality stocks in mid caps and small caps. There could be another 5% downside, but if you're sticking to quality and if you're taking a 1 year view, I think there is more likely that you're going to get 20-25% return from this Diwali to next Diwali in the mid caps and small caps, particularly in the top 200 names. So the key message is last year you could have bought anything and you made money because markets were favorable, everything was did well, global markets were strong. But between now and say next October, November, you have to be very selective and it's important to be with the industry leaders and the industry challenger.
Okay, wonderful. Let's also discuss the theme of today, and that is the auto space. That's with the Hyundai IPO also coming in. I wanted to first take a larger perspective as to, with this new entrant, a large entrant coming in, how does it change the auto landscape for a retail investor who's been investing in sector leaders in both four-wheelers and two-wheelers? the way Bajaj Auto's one-way up rally has been, and thereafter management's cautious commentary on the festive muted demand has also led to, pullback of sorts on Bajaj Auto. How should one be really looking at this K-shaped recovery, yet not a sustained one for the auto space at large? What opportunities does it present?
See, I think a lot of people forget the background because in the last 2 years, if you look at the auto index, it's moved up 3x. Now, that's a very large move for the entire sector. And I think a lot of the positives which people were foreseeing are already in today's price. The thing about markets today is that it's already discounting what could happen 2 years hence or 3 years hence. There was a time a decade back when we used to discount things 6 months or 12 months hence. So I think that's a big change that has happened. Auto has been looking quite toppish on the charts. We've been bearish on it for the last couple of months, and that continues to be our stance. I don't think in the near term there is an opportunity. In fact, there is more likely that the auto index sees another 10% correction from here. Obviously, the IPO listing will be celebrated. It's a big day. It's a big listing. But honestly, I think this might not be an opportunity for investors in this space. I would still look at financial services or IT or metals, where I feel the risk reward is far better than look at autos at these prices. And many of the IPOs that are coming in today
Yeah.
are very, very well priced. So you want to be very careful committing capital there.
Okay. So like you said on IT and metals, we got some names from you on the banking and the financial services side. What about from the IT and the metals pack? In the IT, we've actually thus far seen whenever the performance has come in, it's largely come in from the mid-cap IT basket. Will the tide turn now for the large cap IT firms? Are they better placed right now? Would you also stick with the leaders here?
Absolutely. I think that's the view that the next 1 year we should see large cap IT doing well. Mid cap IT has already done very well over the last couple of years. I think there are
Yeah.
some headwinds fundamentally as well, and they are extremely richly valued at these prices. So the risk to buy them at these levels or to even hold them at these levels, I think is very high. So I would actually switch from mid cap IT to large cap IT. And when you look at the large cap IT charts, I mean, look at a Tech Mahindra, look at Wipro, look at HCL Tech for that matter, which has seen a clean move from 1200 to about 1800 today and still going very, very strong. Infosys doing well, TCS holding well above 4000. I think large cap IT is a good place to hide. The next 1 year, you might see the Nifty deliver, say, 10-12% return. But in that same period, you could have the IT index delivering anywhere between 15 to 20%. So, yes, large cap IT is the place to be in, and the top 4 or 5 names is something that we like. Talking about metals, I think across the board, we are extremely bullish. I think metals
Okay.
is the opportunity of the next 1 year. And the news flow that has come from China recently, which really triggered the rally, could be the reason why metals do well. We like the charts, we like the fundamentals, we love the valuation, and we like the relative strength as well. So, where auto was a couple of years back, I think metals is there today, and it could be the biggest opportunity of the next 1 year.
Okay, metals could be the biggest opportunity of next 1 year. One has to definitely keep an eye out on here too. Is there any space where you're absolutely avoiding looking at this point in time, where you feel that even this 20-30% down correction on several stocks should not be seen as an opportunity to get into?
See, number one, anything that does not have quality earnings, stay away. Because in the last 6 months, people have got rewarded most in stocks which did not have great earnings or did not have any visibility of earning. I don't think that's going to continue. And I think retail investors and even savvy investors need to realize that times are changing and only quality companies, quality earnings with some visibility is going to be rewarded. Secondly, please stay away from narrative based stocks, story based stocks, theme based stocks. I don't think that's going to come back anytime soon. We've already seen a very large correction in railway stocks. We've seen a large
Yeah.
correction in defense stocks, right? So if somebody bought at the top, you never know when that next rise is going to come. Because I think they were narrative based and all the positives of the next 5 years is in today's prices already. So the idea is to stay away from some of these names and stick to the more fundamentally solid companies. I mean, if you look at the financial services space itself, if I have to give you 3 names,
Yeah.
HDFC Bank, SBI, and probably Bajaj Finance.
Okay.
Whether you look at it fundamentally or technically, I think these three stocks will outperform the market over the next 1 year. And I would also want to add ITC, which has been my old favorite. And I think at levels of 460, 480, there is just not much to lose there.
Right. In fact, I was going to be coming to the consumption part, and you've taken ITC as a name. When we were looking at the monsoon season, that was the time when there was talks about consumption theme coming back to the fore, people shifting money back to FMCG, but that only was short-lived. Those part of discussions. But going forward from here, of course, we're talking about the peak festive season, the consumption, consumer demand, whether it's consumer durables, whether it is the bread and butter stocks as well. How would you really look at this entire consumption theme, and where would you place your bets apart from ITC? Is there any other thing on your list?
See, again, as I mentioned earlier, I like to stay with the top names, given the market texture and the market environment that we are in right now. So I wouldn't want to go with anything else apart from an ITC and a HUL. I think
Okay.
both these stocks have done quite well. HUL also, I think, has been trading around lifetime highs, and
Yes.
both these stocks have great potential for upside even from here. If you look at some of the QSR stocks, I do believe there is an opportunity in a Devyani International or a Sapphire Foods. There could be an opportunity in Jubilant Foods. These are old favorites which went through 1 year of consolidation and are now coming back. But the other names like a Marico or a Colgate or a Dabur or a Godrej Consumer, I'm not very, very comfortable because I think they will be underperformers.
Hmm. Okay, let me take this one step forward as well. You've talked about QSR chains as well. How about the new age companies, stocks like Zomato, for instance? Going forward, we are looking at a Swiggy IPO also coming to the fore. When we talk about e-commerce, there's also a talk about retail space, which was in the thickest of action. Stocks like Trent, for instance, which have gone up, pulled back a bit as well. But how this entire retail versus e-tail versus e-commerce space going to be looking to you going forward from here?
Well, it's very clear that e-tail is the future. I think that's what the market realizes it as well. And that's probably the reason a stock like Zomato has done so well, because I don't think a country like India can do without a company like Zomato. So in that sense, I would want to believe that the stock should continue to do very well. And I've loved the way it has behaved. In fact, it's been disclosure, it's been one of our favorite names over the last 1.5 years. And we
Yeah.
continue to recommend this to our clients on every dip. But you have to be very careful as you commit your capital in these new age companies, because some can do very well and then some can completely go off track. And we've seen so many companies that have gone off track. But if there are three or four names that we have been, researching on, one is Zomato, obviously, that we continue to like. Second is Nazara. I think it's a great play on the gaming space, and the stock has done quite well in the recent past. We like it. And the third, again, in the same new age company space would be Car Trade, which I think at 1,000 rupees is a very interesting company doing a lot of very interesting things, basically disrupting the entire industry in some sense. So I would focus on these three names if you have to take a 6 to 12 month call.
Okay, so that's as far as the entire e-commerce new age internet companies are concerned, the top bets right there. And now let me talk about something which is in the name of your company, gold. Nobody has been able to take their eyes off is the kind of move that we've seen on gold. It's been stellar, historic, and it has also surpassed returns in terms of comparison with the equities right here. How are you looking at the gold story play out? Do you think the best is now nearly behind us and one should come back to equities? Or do you think either the direct or a proxy play to gold is something that one should continue to focus on even from this Diwali to next Diwali?
I think gold is going to get even more golden. I think we've been very bullish on it for the last 12 to 15 months. It's been a phenomenal trend. As a classical technician who's been looking at charts for the last 20 years, I just feel that gold and silver are yet to get into gear 4 and gear 5. I
Wow.
think whatever they have done so far is just halfway, according to me. I think over the next 1 year, you will see gold surpassing a level of $3,000, maybe even move to a level of 3,350. So I'm talking about at least 20% upside. Silver has already seen a very large move. It's at $34. I wouldn't be surprised if it delivers another 30% upside. So gold and silver could be one of the best asset class performers for the next 1 year. And I think as investors, you need to commit capital there. And the good thing is, given the kind of difficult geopolitical environment that we live in, you need to have exposure in gold and silver. So if you're taking profits out of mid caps and small caps, which one should do selectively, I think commit your capital in gold and silver. You'll have a nice night sleep at night, and you'll also deliver returns from a 6 to 12 month perspective.
And what is the best way that you advise clients to invest in gold and silver?
Well, I think the two ways are very clearly go with the Bs. I think the concept of Bs, it's very easy to commit your capital through that, or go through the mutual fund routes. There are many funds of funds available in the market. Some of the top names are there. You could commit into them, and they pretty much mirror the local and the global prices.
Okay, wonderful. Well, on that note, thank you so much, Mr. Shah, for being with us on this very special edition. And thanks for all those wonderful ideas that you always share with our viewers. We hope this year pans out to be a fantastic one for you and for your loved ones yet again. Greetings for the upcoming Diwali and the entire festive season. Thank you so much for being with us.
Thank you, Sakshi.
All right, viewers, we'll wrap it up at that this special Diwali edition on Markets Today for you with our market guru Gautam Shah, and you heard from him the key sectors that he believes can outperform from here, his top Diwali bets, as well as his outlook on the Nifty for the next 1 year, and of course which are going to be the winners, the strategies that you need to adopt to be on the winning side of the equity markets. We hope you enjoyed this interview as much as I did speaking to him in this conversation, and do stay tuned on to Business Today Television as we continue to get you more exciting conversations with top market masters of India.
Muda scam continues to haunt Karnataka Chief Minister Siddaramaiah. Fresh allegations of tampering with crucial documents related to Mysuru Urban Development Authority have emerged. Union Minister Shobha Karandalaje has accused Karnataka Minister and Chief Minister's close aide Bhairathi Suresh of allegedly burning all files related to Muda scam in Bengaluru.
Bhairathi Suresh Muda का 100 से ज़्यादा फाइल को बेंगलुरु लाया है एंड इसको जलाया है। तुरंत ही भैरती सुरेश को